Hey everyone, Scott Meyers here, and welcome to our first ever challenge. And looking forward to spending some time with you over the next 5 days. Before we begin, if we could, I'm going to check in. Well, I guess anybody in the chat can let me know that you can see and hear me, and then also my technician and my right-hand man, Mr. Kurt Warner. Our director of education is in here as well. So Robert says you can see and hear. All right, beautiful. Here we go, gang. All right, so looking forward to this. Why are we doing this? You may be asking. Well, first of all, some of you are probably familiar with challenges. We've seen them all around. I've seen them all around. I haven't participated in them because we're too busy doing other things. And so when we looked at this, it wasn't the thought of, well, everybody else is doing it. Why won't we do this? It was the thought that, you know what, we did a lot to give back in 2020, and everybody was pivoting in the real estate industry and the self-storage industry. And we are both an education company. We have an education company, and we also have an investment company. And so both were going 110 miles an hour, and we never got around to doing a challenge. And the idea behind this challenge, we decided, and we talked about, what are we going to do this different that isn't just cheesy like everything and everybody else? And it's just a way of giving back. At first and foremost, we're taking an hour a day for 5 days, and we're going to talk and pretty in depth about different areas of the business, how to get started, some practical steps, and then homework assignments that we're going to track that are meant to be meaningful, to not just to send you off on a goose chase and complete this and say that we've done a challenge and now we can mark that off our list. The goal is to give you, again, some incredible information, so doing some deep dives as much as we can over the course of an hour in 5 days, giving you meaningful action items. Call it a homework assignment, but it's action items for you to go out and complete. And then if you complete all of those, then whoever completes all of these challenges, the homework assignments, the action items, you will be entered into a drawing. And then the two people are going to win. And I'm working from two screens here, so I'm going to be looking over at my notes that I made here. 5 days, 5 challenges, complete and submit. We'll pick 2 winners to receive your choice of either 12 months access to our self-storage starter program. That's normally $97 a month. Or you can attend a live academy. That's a $997 offer. That's one ticket to our live self-storage academy. And this is very timely as well, since we have an academy that is coming up at the end of February in Orlando. Yes, we're going back live. It'll be the first one of the year. And looking forward to that, as so many people have been anxiously awaiting for us to go live again and to get the academies back rolling. Or you can have access to our home study system. So that's a $1,997 normal price. So your pick, 2 winners, your choice, one of those 3, but you got to stick around for all 5 days. You got to engage, and you have to complete the homework assignments, the action items. So they're enough to be challenging and really lead towards you starting and launching your self-storage business or growing it if you're already in the business. But not so fluffy that you don't get anything out of the end of it, and that we can, again, check this off the box, because that is not the goal. So that is how and why and the reason behind this, and that is how you are able to win the challenge that we're putting out there for you. All right. So with that, if you would stay active in the chat. I'm going to be taking a peek at that as much as I can, and so is Kurt. But I'd like to see, to begin with, if we could, why don't you let us know a little bit about who's on the call? I'd like to know who's going to be part of this challenge over the next 5 days. And you got to be here now, today, the first day, well, we're going to give a lot of information, so you'll certainly benefit from that. But if you want to win and have a chance to win, one of the prizes, you have to be here every day. So with that, if you would, in the chat, I'd like to get an idea of the experience level of the folks that are here on the call. So 15 years in real estate, but none in self-storage, or been in self-storage for a number of years. Just give us a brief background on your experience in real estate, investing, and/or self-storage, so we can tailor a little bit of this presentation today in the next few days to the audience that's going to be going through that with us. So with that, thankful to be here and thankful to be in self-storage right now. And as I'm assuming that many of you here are probably looking into self-storage, maybe first time, because, well, all you got to do is, well, there's no way to swing a dead cat on the internet, for those of you who are familiar with the term, but all you got to do is look around on the landscape and see that self-storage has just been absolutely on fire. It has benefited more than many other businesses in 2020. And that's because self-storage typically does well in a time of chaos and transition. And we certainly saw our fair share of chaos in 2020. I think we could all agree to that. But from a standpoint of the industry and the real estate sector, first of all, we are one that is in need, and it is also an essential business and is deemed by the federal government. People need storage, and boy, was it essential, because there were a whole lot of businesses that went under, and those businesses that had inventory, or they had furniture, they had equipment in their businesses, they need to put it in storage because they lost their business and they lost their lease or their building in which they were running their business out of. We also had colleges that were shut down very early, and a rush for storage of all of the college kids' items that were in the dorm rooms. We then sent everybody home from work, and they had to clean out a spare bedroom. They had to clean out the living room, make a spare space for one, sometimes two wage earners in the household, and all that furniture and all that stuff went into storage. At the same time, we've been in our industry, we've been a contactless, a touchless type of business in the transaction, where you can rent a unit online without ever coming into contact with a person. You can do it with your cell phone, or you can do it by way of a kiosk at a facility. So our industry, the self-storage industry, and virtually 98%, I believe, of all our facilities, there was only one and another one that was kind of halfway had to convert over being 100% touchless. We're 98% touchless and contactless. Before, it was cool to be touchless and contactless in business. So it was a very easy transition for self-storage, and not much was needed. We didn't skip a beat. We were essential, didn't close doors. And the demand just went through the roof for the reasons that I just mentioned. So as a result, obviously the investment sector, the financial sector, and anybody paying attention realized that, once again, self-storage benefited greatly from the pandemic. And we certainly don't celebrate it. And that's not the reason why we're here. And that's not my point. The idea is that as an investment class, many of you have also heard that self-storage is very inflation resistant. Many people would say inflation proof or recession proof. Neither is true. It's inflation resistant and recession resistant. So when times are good, people buy more stuff and they put it into storage because they run out of room at their homes. When we have a recession, yes, we are one of the sectors of the economy that does very well. Again, we are in the trauma and transition business, the chaos business. When people's houses burn down, when there's a divorce, bankruptcy, death, estate settlements, I mean, you name it, when you're moving, for all those reasons, there's a need and a demand for storage. And then when there is a recession, as we're either in or heading into, depending upon who you listen to and what you follow, looking at the jobless claims out there right now, I'd say we're heading into it, if not in it already. There's, again, a rush for storage, and businesses downsize, individuals downsize, and they put their extra goods into storage while they move in with each other, while they move back with their parents until the economy turns around again. So at the same time, we have this perfect storm where the lending does dry up to a degree for developments, for self-storage developments. There's a number of projects that were stalled last year in 2020, development projects coming online, all the while there was an increase in demand for self-storage. And so those of us that are in the industry, again, we don't celebrate pandemics. We don't celebrate recessions. But there's a reason why we're in this, and it's because it ticks all the boxes. And when you look at an investment that does well in both economies and is essential and needed, and for all the other reasons why I love storage and got into it, which a couple of them we'll cover anyways in just a few minutes here, all eyes are on self-storage. So you're in the right place, and we won't disappoint. And for those of you, again, that are looking to get involved more heavily with us and in the business, again, we run an investment business. We run an education business to teach people how to do it. We raise private capital and partner with folks to grow our company. And so, yes, we do benefit by getting the information out there in the right way and getting people on the right track. And for those that are interested in more, that's certainly something that we offer. And those that are successful in completing their education and going out and doing the business, we do a lot of partnerships, and we certainly stand to gain if there's a whole lot of folks that we teach how to invest the right way, and we have an opportunity to partner with them as well. So beyond that, again, we're at this stage now where we're helping and we're creating legacy here. That's what our organization has always been about. I started the education side of this business after a chance meeting with Dave Ramsey, who we both share our same financial stories. And I won't get into the details of that, but it was through a chance meeting with him when he said, listen, Scott, you need to go out and teach people about self-storage so that they don't end up bankrupt like I did and where you were struggling in real estate in the tenant toilet business. And so as a result of that, I felt that was my calling, the divine intervention from Dave Ramsey. And so we started our education business. And now we're blending the two together and teaching people how to do this. And as a result of that, out of our abundance, we build houses in Mexico and the Dominican Republic. And we take our students along with us. We pay for the trip. We pay for the house. We provide a home for a family who has never had one before. And we are ending generational poverty one family at a time, one house at a time, and then taking you, our students and our partners and people that work alongside of us out on the mission field. We pay for the whole thing to introduce people to that experience, certainly in hopes that they would decide to do that on their own, but that's not the point. We have an obligation. And so we are continuing to always look for ways that we can add to our legacy and continue to help. We are an organization that at the core and our DNA is serving people. So another reason why we are here, and I'm cutting into my dinner hour each and every evening because we're stepping it up this year in 2021. We're going to continue to give back more because we know there's people hurting. We know there's people that need information. There's some that can't afford to pay for information and get the right tools and resources. And we are the place. We're the nation's leading instructor and education company on how to teach people how to get into the self-storage business and grow and scale it. And so we don't do this. We do this as our mission. We don't normally do it for free. But over the course of this week, this is exactly what we're doing to help folks. So with that, the reasons why we're here, the reasons why we love self-storage and why we love to share it is because, again, it does so well. It outpaces the real estate investment trust or the REITs sector above all other asset classes as we head into and out of a recession. This is my third recession that I'll be going through. And again, we don't celebrate them, but we know that we are going to benefit from that as well. And again, all you need to do is look around at many of the articles that shows the REITs sector. So the extra space storage, public storage, life storage, CubeSmart, the big guys, continuing to post quarter over quarter gains, doing extremely well during this recession. Wall Street Journal. And I'm pulling through just a few articles that we've had in here, the reasons why investors are moving into self-storage units. And a little bit of a misquote, a unit is a unit at a facility. I think they meant moving into investing in self-storage because it's illegal to live into a unit. And some investors, it doesn't mean that these investors are broke and they're moving into units. It means that the savvy real estate investors are investing in self-storage. So whether it's on the active side like we are or on the passive side, like many people that come alongside of us, and invest passively in our investments. Again, self-storage has been in the press and the Wall Street Journal and Forbes and Fortune magazine a number of times over the course, since March. And we are seeing a lot of money being poured into this industry. National Real Estate Investor, if you want to look up some of their articles, are constantly covering self-storage and how it's surviving COVID-19. There's a study done by Green Street Advisors, and these are one of the economists. Here's another tip, something to write down. Green Street Advisors does an incredible job of tracking the real estate markets, the finance markets, primarily as it pertains to commercial real estate. And if you would follow them and just click on some of the articles about, how well self-storage, if you're interested in, is stacking up, but just look at all the real estate asset classes and how well they've done during COVID. And you'll see self-storage is on the top. I think the only thing that has done better than self-storage during this sector in terms of real estate is data centers. Data centers have done better. I don't know much about data centers. I know it's not easy to go out and buy one or build one. But we've seen that, again, self-storage continues to do well. The commercial property executive talked with a number of their analysts as to what they're seeing on the horizon in 2021 for self-storage. And some of the gentlemen that follow this sector, specifically the self-storage sector, have stated that self-storage has proven to be a recession-resistant asset class. And do they expect the sector's resiliency to persist in 2021? Mr. Bollinger, who they interviewed for this, said, I expect it will. It's tough to bet against it at this point. Self-storage is again proven to fare well in most all economic conditions. So while I expect storage to maintain this reputation into 2021 and beyond, we expect that the folks will be doing a fair bit of due diligence as well as the lenders in step. So begin to go look if you haven't already. There's a number of resources and a number of people that are singing the praises of self-storage, and we're obviously one of them, very, very bullish because we know what's going to happen. Again, this is my third recession, and we know what happens, and we're already beginning to see it. Businesses downsize, individuals downsize. At the same time, private lenders are pulling hundreds of millions of dollars out of the stock market to invest. And they're looking at another John Byrne. John Byrne is one of the economists that we follow over here, and we get his newsletter. And he's stating that a lot of this money is pulling out for what we normally see during a recession, pulling out of the stock market, even though there's gains to be had. We know that it goes up, but it goes up and down like a pinball machine. And right now, investors are pulling their money out of the stock market, and they're investing in hard assets that produce cash. So for us, we are syndicators. We put together private equity partnerships, and there's a lot of folks right now pulling out of Wall Street. There's also a lot of folks, middle managers, that are without jobs. I mean, the number of companies that have been decimated during this time frame. And we have a whole lot of folks that have 401ks. They have money to invest, and that money is available to invest by way of a self-directed IRA that they can now invest into a self-storage facility. And so we're seeing a lot of those dollars coming back into the marketplace and back into play. We also see, at the same time, we see a lot of sellers that are grabbing cash for their properties. Some of these folks that are at the end of their career, and they have decided that they do not want to go on and invest any longer actively. They are investing passively, and they are looking at projects that don't require them to be as active. So they're selling off their facilities. They may be a little scared of COVID. They may be a little scared of the recession that's coming up or some increased competition. Either way, we're seeing a number of investors that are now getting ready to sell. Self-storage owners are getting ready to sell their facilities. So the idea behind this, and hopefully, again, the reason why you're here, is to take advantage of this and to learn the business and take advantage of the perfect storm that has been created. We are not celebrating the situation that we're in right now. It's bad out there for a whole lot of folks for a whole lot of reasons. But if you're looking for an asset class to invest in, whether it be passively or actively, right now, all eyes are pointed towards self-storage for all those reasons, combined with the fact that the SBA has a lot of money that they're putting out into the self-storage sector, because it is a business and it is an essential business, with interest rates that we've seen right now that are just unheard of. Makes it is an absolute perfect time to be getting into self-storage. And so that is the reason why we're making hay while the sun shines and doubling down and increasing our activity. We're adding staff over here at our company, always looking for good people as we continue to grow, and looking forward once again to 2021. So, and at the end of the day, the stuff market doesn't crash. The stock market does, but the stuff market just never crashes. We've seen this happen for the past 30 years since we've been tracking self-storage. It is the reason why we're in this business, and why we are so excited about this. All right, so a little bit about myself. And yes, I'm looking in the chat. I did say Green Street Advisors. So there you go, Kane. A little bit about myself and what qualifies me to to teach as an educator and an investor, and to be on this, and any reason why you should listen to me. I've been in the business for a number of years. First of all, let me back up. Coming to you live from Fishers, Indiana. It is a suburb of Indianapolis, where I live with my wife and three amazing kiddos, amazing wife and three amazing kiddos. Although part-time right now, my oldest daughter is in college in her sophomore year. My son is in 6 months in Ensenada, Mexico, where we go to build houses. He's spending 6 months there, and as he's going through some training, is going to be out on the mission field for a while. And then my youngest daughter, who is 15 and is a sophomore right now. Sold all our houses after buying a whole bunch throughout the 90s. We had 78 houses, 450 apartments, and sold all those before we got into self-storage, and just own one house now. It's the one that I'm coming to you live from right now. But then 2005, we got into self-storage. To date, we have purchased existing facilities. We have developed from the ground up facilities. We have also converted old industrial buildings, warehouses, all types of buildings into self-storage. And we have 2.2 million square feet of self-storage all across the country, over 13,000 doors. And we'll do another 10 to 12 projects this year to add to that tally. And more if time and bandwidth will allow it, and if the right opportunities come our way. We've raised over $50 million from our private equity partner pool, folks that have decided to come along and invest with us. And we have a whole lot more of those folks that have been attracted to us, that have found us and want to invest in our projects. So we're looking for more projects as well. I write articles for Inside Self Storage, the magazine. I speak at their live events when we had live events, and back as we're heading into this year at their live events. Written for, spoken for the Self Storage Association, the trade organization, their magazine, their trade shows as well. I write for Forbes magazine on the self-storage sector. I've worked with Robert Kiyosaki's organization as their self-storage advocate, if you will, and in a number of other ways, and also launched the Self-Storage Podcast, the #1 podcast on self-storage out there. So in 2007, on the education side, that's after I had my chance meeting with Mr. Ramsey, is when we developed this and launched our self-storage education business. But at the end of the day, we have two businesses. We invest and we also teach. And we take 10% of our profits. We tithe. We take 10% of our profits from both of those businesses, and we put it into a pool to go out and build houses and take people along with us, as I mentioned. And so the goal is to build 4 houses per year. We take 2 trips and build 2 houses, and we take about 40 people along with us. It's a very family-friendly mission trip. We did one last year. We were the second team to go back live down into Mexico to build a house with YWAM Youth with a Mission, our partners, and we are poised to go at the end of May, and we'll be building 1 house, maybe 2, depending on how many people we get to go along with us. But the funds are available for the folks to come and to build the house. So we're looking forward to getting back on track this year, COVID permitting, if you want to call it that, or government permitting. So we are moving forward, regardless of what's going on in the economy, regardless of what is going on after the elections and the fallout, and we won't get into that. At the end of the day, I learned a long time ago not to pay too much attention to the news. I pay attention to the important news, and that is what's going on in the finance markets and real estate, regardless of the administration, who's in power, Republican or Democrat. Give me the rules, give me the playbook. We'll follow them. I made money. I've been at this since 1993. I've been investing in real estate, and I can make money in any economy. Just let me know what the rules are, and we'll move forward. And that's what we're doing right now. So the reasons why we like self-storage again is because really from my journey. I mean, that's kind of how I ended up in self-storage. And that is, I began in single-family houses with the tenants, the toilets, and the trash. And followed the gurus, read all the books, got the home study systems, joined my local real estate investment association, which I later became the president of. And we began investing in single-family homes. Bought my first one, no money down. It was an assumable VA mortgage. This was back in 1993. Did a lease to own on it. They didn't ever own it. They never purchased it. They just rented it, trashed it. And that's what happened with most of the rest of the others. And it was this vicious circle of constantly trying to find the right person, move in. 10 months later, they stop paying. They know it takes a while to get them out. They trash the place, move on to the next one. So now that wasn't the same in every case. And we weren't in the slums. We were in working class neighborhoods, same with our apartments. But at the end of the day, everybody says, gosh, we love rental real estate. People pay down your basis. They pay your loan off for you while they're living in your unit, and you get the benefit of that. Well, it's not so easy. It's not mailbox money by any stretch. And yeah, the folks that destroy your property, move out, owe you 2 months rent, and the courts side with the tenants because for whatever reason they side with the tenants. I realized that the best cook in the world can't win at this game. And so that's when I began looking into self-storage and realized that it's completely opposite. In self-storage, when somebody doesn't pay you, after 6 days, we lock them out. We put a lock on their unit. It's called an overlock. And then if they don't pay us in 90 days, we sell their stuff off and then we blow it out with a blower, the unit. It's a concrete box on a metal slab. I don't have to, replace carpet, paint, drywall, all the things that go into a house or an apartment. We spent $1,300 on a turn on an apartment or a house to get it rent ready. And now when somebody moves out or we have an auction and move them out, we get our money back. Not all of it, maybe all of it, sometimes more than what was owed on it. And what we get back is an empty metal box on a concrete slab. So you blow it out and you move in the next person waiting in line. And so that I realized was, that's it. We sold our houses and our apartments And we decided to go down that path of investing in self-storage, and never looked back. So when we began looking into the business in the beginning, I thought, gosh, well, it sounds great, but is there enough opportunity? And indeed there is. Lots of facilities across the country, 25 plus million. I think we're approaching closer to 30 million units right now, where there's only about 17 million single family rental units out there across this country, which, moving target all the time. And everybody's looking at apartments, but apartments also as an investment vehicle, everybody's moving away. The returns are down. You can't evict people right now. The REITs, the real estate investment trust for apartments, are tanking. People can't get rid of their properties, and because their hands are tied. And at the end of the day, we're always, in the tenant toilet business, you're always susceptible to something. Either the people, because they get to rule the roost, the courts get to dictate and create all the rules. And at the end of the day, now our government has stepped in and said, you can't evict people, even if they don't pay or can't pay, regardless of whether they got a job or not. You can't evict anybody right now. And so, no, thank you. I will be in a business in which I have the ability to handle whether, I decide to give somebody free rent or not. And the good news is in storage is that we have the power of lien laws, not habitation laws. So we're not governed by habitational laws where bleeding hearts will, come and with pitchforks and torches and tell us that we're bad for moving somebody out because they didn't pay the rent, even if they have a job and they got a nice new car or whatever reason or excuse. So with lien laws, it's just their stuff. If they don't want their stuff, then they leave it, we sell it. It's as simple as that. And there's no protection for folks that don't pay, and not paying, we know, is just a form of stealing. And so I realized that, what, I'll be on the side where the good guys win, because I have my charity. We build houses, but my business is not a charity. And so that, and the fact that when we began looking into the business, it was growing, and it still continues to grow. When we go through a recession, there's increased demand, less money out there to develop, and that creates, again, the perfect storm. And the fact that, we're in the stuff business, and people just, we're a nation of renters and hoarders. So at the end of the day, we realize that because of that, people aren't going to change. We're in the stuff business. We are a consumer-driven economy, and that the marketing machine behind all consumer products is insurmountable. You cannot fight it unless you completely shut it off, and it's almost impossible to do that. So our worth and our value in this country is defined on many things, and it's having, it's coveting, it's wanting. I've been able to resist that as much as possible. I have one rental unit, and it has our old office equipment and some inventory and things that we sell off, eBay items and things that our kids have for our businesses. But we don't have a bunch of consumer stuff. As a matter of fact, I'm the opposite of that. I love to purge. I just love to get rid of stuff and throw it away. I get in trouble a lot around here in the house because I get rid of a lot of stuff. But at the end of the day, I am not the typical self-storage customer. But you know what? I don't have to take on those habits to believe in the business model, because it works, and it works all day long. All right. So what I'm going to do right now is so I asked you a question at the beginning. I'm going to take a little bit of time here before I get too far and talking about all the reasons why you should be in self-storage. I know there's a couple of questions that came up, and so I wanted to take a look at some of those real quickly. Okay, there we go. All right, good background. Fantastic. Good to see that. Thank you so much. Joyce, like to partner getting too old to run a business? You're never too old. Remember the new life expectancy for those of us that are, I'm over 50 now, is I'm supposed to live to 120. So I'm not even at middle age yet. So I don't know about yourself, Joyce, but I'm just getting started. And as long as there's air in my lungs, I will be investing in self-storage. We talked about Green Street. Yep. Okay. First one, Kane, did you buy or develop your first self-storage facility? I bought my first self-storage facility. And that is because without experience, banks will have a tough time looking at you as a developer and taking a big risk and saying you're going to lease it up. Whereas if you have an existing facility, they can look back. They can look back at the records for past 2, 3, 5 years, and they can see historically how well the facility performed. And if it's done well, then they're assumed that you should be able to do the same by keeping your eye on the manager, the management company that you hire. And if not, they can always step in and hire a management company in receivership without losing any of their money. So remember, they're always looking down the road. So much easier if you have an existing facility. And then Kate also asks, would you say there's still just as much opportunity in the industry today as there was in 2005? That's hard saying. Many of these questions, I'm not Kane, and for the rest of you, I'm not going to dodge by saying it depends. But the answer is it depends on what you're looking at. A lot of opportunity for development opportunities out there, ones that are abandoned because people ran out of money. We're looking at a lot of those opportunities. We've seen our mailers, our increase in the response rate of the mailers that we send out and our students send out has skyrocketed because there are so many folks that are looking to get out and getting ready to retire now. Their valuations are good, strong, because money is cheap, money's still plentiful, and they may be a little anxious and nervous about what's going on in the economy. So we're seeing a lot of opportunities out there. Here's one of the differences that I will say, Kane, is that I don't know, kudos to ourselves, our company or not. When I got into the business in storage was 2005. There wasn't a Scott Meyers, there wasn't a company like ours. There wasn't anybody teaching people about the business. We're the first, and now there's a lot more people that are educated, and that's a result of the internet. It's not. I'm not pointing to me and saying that is the reason of our company. But I think people really got smart and really got wise if they got burned in real estate, no matter what. And they're far more educated now when looking at self-storage, when looking into multifamily and mobile home parks. So I'd say you're up against some more fierce competition, whereas in years past, you maybe had some people that just didn't know, they didn't learn, and because they were scared, they didn't pull the trigger. So I think that's what the difference is right now. Okay, good. All right. Best way to apply for an SBA, call them and apply. So if you will contact our friends at Live Oak Bank, tell them that I sent you, Mo, Bishesh, any of them, very, very well qualified to help you. They're the nation's #1 SBA lender. So give them a call. And well, I take that back. Let me, before I just turn you loose on them, you got to have a deal before they'll talk to you. They're not going to talk to you if you have a deal. So don't go calling them and say, hey, Scott said you'll fund a storage facility. Is that right? You need to find something. You need to find something. Okay. And then send it over. Okay. All right. Great. I get it. Okay, so I appreciate that. Hey, first of all, another rule for those of you that are our vendors and our consultants and everybody that we work with: no heckling. This is my show. So one of my esteemed colleagues, or one of our consultants, says that not everyone teaching knows what they are talking about. So I don't know if you're pointing that towards me and you know who you are, but there are a lot of folks that are teaching about this, and I get the idea is the follow-up to that is, thank you so much, is that there are, thanks a lot. Yeah, well done, Bob. At least mine isn't gray. So there is a lot of folks out there that have done 1 or 2 deals that are teaching about the business that have no business. So be careful where you get your information from. And as always, if you're getting into the business, learn the business. Get somebody to come alongside of you, a mentor and consultants, appraisers. Utilize the folks that are out there in the industry to assist you in making the wise and the right decision. Okay. Okay. All right, I'm going to move away from the peanut gallery here. Not that all of you are, but we'll jump back in here because we've got about 25 minutes left. I want to leave some time for some education as well as your questions. So, one of the questions that was also asked a lot is that, okay, we're heading into a time now, Scott. Times have been good for self storage, and we realize. And I wrote an article for Inside Self Storage a few years ago. No, yeah, about 3 years ago. It was about the boomers that we're creating and, an incredible demand for self-storage. And because their parents were downsizing, they were moving into assisted living, and then they were passing on. And so each step of the way, they're moving more things into storage. And then when it comes time to sell their estate, the kids didn't want it. And they're moving things into storage. And so they've also accumulated, they've done well. They accumulated a lot of wealth. They had boats, they had cars, they had RVs, they had secondary homes, vacation homes, and they just had a high propensity in demand for storage. And so we saw a lot of folks out there that, the boomers have created a huge demand for storage. Well, what about this generation, the millennials? They are minimalists by nature. And some folks would say, well, they're not motivated. They're not motivated by money or stuff. They're not motivated to stop playing games or do whatever. And I'm here to tell you, first of all, that's not true. The millennials are doing incredible things, and they are the future of our, they are the future generation, and many of them are incredible leaders and doing very well. But what we've seen is those that are living this minimalist lifestyle by choice, they're choosing experiences over having a big house and a bunch of stuff. Well, those experiences, however, if somebody is choosing the minimalist lifestyle in terms of a small house, a tiny house, or just an apartment, they're not settling down in a bigger house or a condo or sharing in their living space. Their work, play, life schedule and balance is, I'm going to work for 6 or 8 months somewhere, earn enough money, then I'm going to go play for 3, 4, 5 months somewhere else. Okay, well, if they're going to do that, they put their stuff in storage while they're off playing, right? Their experiences usually involve equipment, camping equipment, kayaks, mountain bikes, guns, I mean, you name it. And so all that stuff has to go somewhere, either while they're traveling or because they're living in a tiny house or living in with somebody else or in a condo. And what we've seen is that the propensity for demand in the millennial generation is even greater than the previous generations. So worry not, folks. The self-storage industry is in very good hands with the millennials, and they are driving demand. And thank you, millennials, for doing so. So much so that we've seen Expresswire is another one of those resources that I would tell you to go to. They recently predicted 134.7% growth in our industry through 2024, and that demand and that growth is being driven by the millennials. And if you care to, my Forbes article that came out October the 21st of 2024, reasons investors are looking at the self-storage industry right now, where I touch on 4 reasons why investors are looking into self-storage right now. So there you go. You got to go look at the article to see. The reasons why, another reason why we love the industry, and it's simpler for people to get into the business. I think a lot of people get nervous or anxious about the finance side. How am I going to get into commercial real estate when I've never bought real estate? I've never bought a house, or I'm just in houses. I'm not in commercial real estate. Well, first of all, commercial lenders, they look more to the strength of the entity, the actual piece of real estate that you're buying, than they do the borrower. So they're looking way down the road. Do I have to take this thing back? Because when they make a loan, first of all, the first goal is to get their money back, right? Second goal is to make money on it. And then the third is that they avoid taking the property back. They don't want to be in the real estate business. They just want to lend on it. And so when it comes to self-storage has the lowest loan default rate. The most recent figure, I want to make sure that I got this right, in cumulative loss rate for self-storage as a sector is 1.1%. 1.1%. And you compare that to healthcare, healthcare facilities, medical buildings, it's a 6%. So it's a 6 times. Call it worse investment. Hotels, 4.24 and going up, and multifamily right after that at 3.35 times. So 3 times more likely to have loan losses. And that goes the same for loan default rate. 6% of all loans in self-storage default. Whereas then you get into multifamily, and it's actually higher than, it's more than 3 times. It's at 21.45%, and hotels are at 24%, and healthcare is at 35%. So banks, if you're struggling getting that commercial loan, perhaps you're in the wrong asset class. Maybe you're looking to start a hotel, or you're looking at apartments or multifamily. The banks are a little skittish. Their underwriting is a little more stringent. It's tougher to get the better deals and the better financing and rates and terms, because the banks know that there's a 4-time better chance that the loan is going to default if they make you a loan on an apartment complex than they are in doing so with a self-storage facility. And so, and this is all information that is readily available to go out and take a look at. I'm not making this up. But also remember, when I got into the business, I was a penniless landlord in the apartment business, and my back was against the wall, and I didn't have a PFS that was very strong. And so if I was going to stay in real estate, then I needed to be in an asset class in real estate in which the lenders were looking more to the strength of the property than they were the strength of the borrower, which is me. And so self-storage fit the mold. So for those of you that perhaps your credit doesn't look so hot, perhaps you don't have a whole lot of cash, the good news is that the banks love self-storage. So if you put together a deal and put a package in front of them, they're going to look at everything, and there's no guarantee, but they're going to look at the deal more than they are you. And perhaps using a partner, which is what I did on my first project, will be enough to get you across the finish line and off to the races. So the SBA, also another route, as I mentioned, Live Oak Bank. The SBA, Small Business Administration, looks at self-storage differently than any other asset class because they look at it as a business. And so when banks are traditionally going 65% to 75% LTV, the SBA, Small Business Administration, knows how well self-storage does as a sector. It has the lowest loan default rate. It does so well during good times and bad times that they will go anywhere from 85 to 90% LTV, which means that, yes, there's less that you have to bring to the table in order to get the loan across the finish line. And by the way, those SBA loans aren't available for any other commercial real estate asset class. And so this isn't a financing course. This isn't, we're not talking about financing, but over the next 5 days, you need to know the reasons why you need to do your homework assignment, because all of these things that I'm touching on right now are going to be part of your challenge to be able to then go to the next step and to be able to win and, in order to have the opportunity to win by being one of 2 that are going to be selected to win those prizes. Worth well over $1,000 that I mentioned at the top of our call. So it is important to know, because real estate is finance, pure and simple. It's a math equation. We're always doing math when it comes to working the numbers backwards to determine if this makes sense to move forward or not. And the quicker you understand that, the easier it is for you to be able to then tell that story. And I don't mean a story as in a fable, but I mean telling that story to a lender and to your private equity partners and any other partner, that you understand exactly how you're going to get to from A to Z and plot the path to profitability for them. So it's a math exercise, and it's underwriting, and it is finance. You need to understand that, and we'll be getting into that a little bit later. All right. The main thing is it's important to know that banks love self-storage. They are clamoring to get deals, to get into this business, and they want to do those deals with you, because banks to go out and find them on their own. Same with private equity. Private equity is coming out of the stock market. They've been sitting on the sidelines for a while, and now they want to get into income-producing hard assets. And of all the real estate asset classes, the one with the lowest loan default rate that does very well during a recession, as we're heading into, is self-storage. So folks, if you've been thinking about getting into self-storage, I would make 2021 that your goal is to learn about the business and to get into it one way or another, because there's a whole lot of money coming into our sector right now. There's a whole lot of properties that are looking to consolidate and roll up, and we are an industry that is just ripe for consolidation. 90% of all the facilities out there are still owned by national players, the REITs, the real estate investment trusts. 10%, I retract that, 10%, only 10% of all of the self-storage facilities, units, doors out there are owned by the corporate guys, the real estate investment trust. 90% is owned by us, mom and pops, the small to medium-sized investor. So to go out and create value and then sell off to a national player, regional player, or refinance and keep your own, or can create your own portfolio and your own empire of self-storage facilities by rolling all these up into your own. There is no other industry in real estate that has more opportunities to be able to do that than in self-storage, because we still are so fragmented, and it is again ripe for consolidation. And when you're done building your own portfolio, then you'll sell it off at that point to the national players, the bigger players, who will pay the higher dollars for your portfolio. So if I didn't get a chance to tell you my business plan, that's it. I just did. So who's getting into the business? Where do I find this private money and this private equity? Well, friends, family money. That's you've probably heard of that term before. That literally means friends and family, but also means the people that you're close to. It means not institutional money, but institutional money is pouring into self-storage as well. The Motorola family has just put, how much did they put in? 15.5 million. They're developing their own up in Chicago. There's Arizona Public Safety and Retirement Systems committed to $80 million to a fund. Just the list goes on and on. We're seeing Mr. Bill Gates is now getting involved in investing. Mr. Warren Buffett is investing. And now Wall Street, the institutional money, Blackstone, with their $1.6 billion purchase of Simply Self-Storage. When the top investors in real estate and the top investors in Wall Street in the country are putting their money into self-storage, all of a sudden, again, no surprise that all eyeballs are on self-storage, and it even further legitimizes its place at the top of the real estate heap as we head into this economy that we're heading into right now. So at the end of the day, here's what I found when I began getting into self-storage, and that is I didn't have the credit. I didn't have the cash to get into the business. But if I was willing to go out and find and understand the math, understand how to underwrite a deal and put together, an opportunity and turn it into a deal. Not everything is a deal. It's only an opportunity until you realize it's a deal, as to get those deals in front of lenders, get them in front of private equity partners, and then partners that perhaps have to sign on the loan with you or bring in cash or both. Now is the time to be able to get into the business. All you need to do is go out and find those opportunities, and then find the funding for it. And as they say, if you get a good deal, the money will come. And that's not so easy, because what we're finding right now is you got to create the deal. You'll find opportunities all day long, but you got to create the deal. And that comes to understanding and realizing and recognizing what it takes. What are the elements of a good deal, so that people are interested as well, and how you go about creating it and what that story looks like. But how do you plot the path of profitability? So the good news is, a whole lot of money chasing self-storage. If you're willing to roll up your sleeves and do the heavy lifting that it takes, you'll be successful in this business. And you have a greater opportunity right now, because what I find is that there are fewer and fewer people that are willing to roll up their sleeves and do the heavy lifting and the hard work it takes to start this business. The good news is, once you start it, it keeps rolling. The flywheel keeps rolling, as Jim Collins calls it in his book, Good to Great. And then once we began moving down that path and selling off, and for some of you, maybe it's your 9-to-5 job. Some of you are following the path that I did, in which you had a 9-to-5 job, and then got into real estate, and then you found yourself as a full-time employee in your own business. I was I was a slave, and I was answering to nobody except for my tenants and the contractors and the courts and the eviction court and everybody else, zoning and you name it. But once I moved into self-storage, when I get to control the shots, and got rid of all the tenants, the toilets, the trash, the courts, and the contractors that stole from me and never showed up, and started getting into the metal box and concrete slab business, where people store their stuff, not people. Then that is when 90% of my workload and my stress just went away. It was gone. And I actually got to focus on the business and growing the business, rather than working in the business as a full-time employee of my own company, and doing it for a low wage per hour, let me tell you. So we achieved Michael Gerber's E-Myth, for those of you who read his book. And how systems run the business, we manage and tweak the system. So many of you who have already read that book, you understand what that means and what that looks like. And if you haven't, go back and read Michael Gerber's book, or get a copy of it. Systems run the business, we manage and tweak the system. And we created the E-Myth. We created the systems in our business that allows us to run the business with systems, and just tweaking it with a few of my lieutenants, a little bit by myself, our managers, and allows me to go out and do the things that I do best, and the things that you should get to the place where you're doing in real estate. And that is taking that conveyor belt of money and the conveyor belt of properties and matching them up, and then growing each of those independently. My sole job should be looking at and analyzing opportunities and creating or determining whether it's a deal, and then growing my investor database, as well as my pool and my Rolodex of lenders, banks, financial institutions, to be able to mirror the two and match them up. And then I am at the middle, if you want to call it that, or I'm at the top. However you want to look at it, that is the highest and best use of my time, and where I strive to spend 80% of my time is doing those two things. And if you're in the real estate business, you should be spending 80% of your time doing those two things: sourcing capital and deals, and matching the two up. You build an organization, you get good team, and you build culture, and you lead them. I mean, that's all part of it as well. But that's the 20%. 80% of your time should be doing those other two things. All right. I'll take a quick peek here. What was the name of that he just recommended? Articles. I think missed the name of the company. Articles. I'm not sure. Inside Self Storage. I write for Inside Self Storage. It's a good magazine. I write for Forbes magazine, also a good magazine to be able to read. And I can't remember what other one. So Kim, if you want to clarify that, feel free to do so. Bob also mentioned, whoever is a vendor that you maybe look at bringing in any part of your business, just make sure they've done it, and not just talked about it. It's one thing for somebody to say that they've done it, but at the end of the day, one thing to say that they've done it, but have they actually done it? So do your homework, do your due diligence. So Jay, yes, you are close, and being so close, do you have information on storage near us? Well, it depends on the storage you're looking at. The information I'm sharing works nationwide. So everything I say works in every market. It's not specific to just one particular market. We're we invest all across the country, utilizing the same techniques and tips and strategies and the same process that we have in place anywhere and everywhere, from how to find, evaluate, purchase, and manage facilities. It's all the same. There's nuances in every market, but all these steps are the same. So to answer your question, yes, absolutely. All right. So as we wrap up, we're coming up to the place where we are at the top of the hour. Another reason why we love the business is, again, I think so many people, many people think or have asked to say, gosh, well, your money goes a lot farther. Scott, it buys a lot more units, but what about the management side of that? That seems to be a lot more rent to chase. Well, we're set up on ACH and debit, and we don't chase people for it. It's an automatic, and they know that if we don't get the rent for their stuff, then we lock them out. And so it only takes once or twice for them to be late, and them coming to the facility and realize they can't get their stuff, that it doesn't take long to train them and for them to understand. And we make it clear up front. So we just don't have those issues. I mean, unless somebody just totally disappears, or their stuff isn't worth the $30 a month that they're renting a unit for, or $100 a month, or what have you, or then they don't pay. It's a very rare instance in which that is the case. But the management side of the business, our managers that are at the facility level, they are monitoring the rent, and they're answering the phones, and they're assisting people. But we have kiosks that allow people to rent, like a Redbox rental at the site. Although we're not doing much of that anymore because you know what. This little thing right here, folks, it allows you to have software on it with a responsive website. Go to any one of the websites of our facilities, and you will see that you can rent a unit online. And so I'll bring that piece up right now. For those of you who, if Kurt hasn't put in the chat, our two businesses can essentially be found at selfstorageinvesting.com. It's our education business. You can also learn about our missions and our trips and the things that we do on that side of the business, as a result of that side of the business. And then go to passivestorageinvesting.com, where we teach people and show them the opportunities that they can get involved in and invest with us passively if they don't want to do it actively. And so you get a flavor and understanding of what we do on both sides of the business. And so, we look to get into this business. We realize that our highest and best use is not managing and not spending a lot of time on that. And so to be a little more passive, that means putting things in place and utilizing the technology that is out there. And so we have responsive websites. We have call centers. We utilize the technology that is in place to lock a person out of the unit remotely with an app on our phone, with the locks that are in the inside of the units, and being able to utilize surveillance cameras to monitor the office, to monitor the units themselves, to monitor our managers on the site. So, for all the technology that is available out there, keypads, gate codes that are all tied into the software, where somebody can complete the entire transaction without coming into contact with a live person. That's the highest line item expense in any business is payroll and people. And so if we can reduce that in our business, then that just makes us more profitable. And that's again, another big piece of our model, is that we can run these facilities in many cases unmanned, without a person. And we can utilize technology to do so. Our larger facilities, we have an employee and sometimes one and a half, a part-timer, if we're running a sizable U-Haul business out of it and selling locks, boxes, and moving supplies, and a lot of other ancillary income streams. But by and large, our facilities have a very, very little on-site payroll behind the desk, because it's just not necessary to do so in this industry. And so as we, and I think that's probably a good place, if we talk about, we kind of touched on and looked at, the ways to find facilities and the opportunities that are out there, the reason to get into it right now, purchase, manage, finance, and operate, those are the major food groups. We'll drill down into many of these and the legal side of it as well throughout the rest of this week. But here's what I wanted to get across to you today, and that is the challenge. What does this look like? So there's going to be a challenge each and every day. You can have an action item, a homework assignment, if you will. Nothing happens without a plan. People don't plan to fail. They just fail to plan. Sorry, I had to make sure that I got that right. Correct. And it all starts with a plan. And anytime that we are working with our students that come into our mentoring program, the very first thing that they do is we have them fill out a business plan, and we give them a template. It's a 30-page template. It's a very defined business plan, but it's the same business plan that they'll use when they go to the lender to ask for a loan, and then morphs into a private equity raise if they're raising private equity, bringing in partners. So very detailed. It includes, absolutely everything. It's a template from one of our businesses, and so we give that to our students in our mentoring program so that they have the framework to work from. For those of you that are several steps back from that, or you may never get to that place, for those of you that want to get your name in the drawing, then here's your homework assignment. Kurt's going to send out to you, and it's also, I think he's going to make it available in the chat here. It's a one-page business plan. All right, it's 2 pages, but we call it a one-page business plan. But essentially, it's the things you need to do to begin planning in 2021, how to take the steps to get into your first business. So it looks at, the first of all, setting goals. Here's my goal. This is what I plan to do. Here's an idea of what the facility looks like, proximity. So you have it in writing, you have it down, what you visualized getting into, and then you work backwards from there for putting the action items in. So the things you need to do today, the things you need to do in 3 months, the things you need to do within 6 months and 12 months, it's going to identify for you or help you identify, what are the challenges that are going to keep me from doing this, whether it be time, job, lack of money, lack of credit. Well, that just means I need to change and alter and look at doing partners or what have you. But it's going to walk you through. It's a 2-pager, very simple, however, very, very instrumental in getting a snapshot and just really helping you to be clear, where I'm at and what it's going to take to be able to get into this business. And so we'll dig into that a little bit and go over that next week. But you need to go out and begin to fill out, and you have to fill it out in its entirety. You have to fill out this page, and there's little gray boxes in which you fill it out. We have to have an answer in all those so that we know you're not just cheating and doing lip service to this. But if you truly want to help yourself, you should do it. Why wouldn't you? If you're here for a reason, I would hope, and that is to get into the business either now or eventually. So this is the next step. So fill out the business plan. It's a 2-pager. I'm going to say it won't take you that long, but you know what? It should. I'm not going to sugarcoat it. If you're serious about this, you need to put some thought into it. And it should take you a little bit of time to think about this. And that's, depending upon the individual, depends on how long it's going to take for you to be able to fill this out. So there we go. Kurt just made it available. It is there in the chat. So pull that down and go through that. Fill that out, and you will be... we will be going over that next week, and you will be surprised at how simple this is, but by just putting it down on paper, how clear you can be. All right. So there is a Q&A option on Zoom meetings as well as the chat. So feel free to use both in this as well. And we got about 2 minutes to go. So it may be easier to just put something in chat if you want to, but we do have the Q&A. I'll toggle over there. No open questions at this point. So any questions that we have for now before we sign off for the evening or the afternoon for some of you? Well, how about that, gang? We got it right at an hour on the first time out for our first challenge. So we can definitely check that one off the box. If we have questions on filling out the business plan, where's the best place to get those answers? Spouse, friends, significant other, business associates, just put some thought to it. This is your business plan. There's no right or wrong answer. So Kane, this is your business plan. This is for you. So if you need help and clarification on that, of course, my good friend Google, your friend and mine, there's no zingers in here, and there's no right or wrong answer. This is your business plan. So take a look at it. It's 30,000 feet. Here's where I want to be. Here's the steps and the things I need to take. So you need to identify your strong suits, your goals, what you feel is realistic. And of course, all of this, many of you may be familiar with setting SMART goals, and that's what I would ask in this. That's the one piece that I forgot to mention, is that as you're looking through this, there are goals at the front end, and they should be SMART goals, right? Strategic, measurable, which means, I plan to go out and I'm going to send some mailers out to owners. Well, what's some and by when? So it's attainable, which means it's got to be attainable. It's something that you have to be able to do. It's got to be realistic, not pie in the sky. So you know what, I'm gonna partner with Bill Gates in his endeavors. I'm gonna go find out that article that Scott talked about. Realistic and timely. So strategic, measurable. So I'm going to send out 10 mailers, contact 3 brokers within the next week. Strategic, measurable, attainable. So attainable and realistic are kind of the same thing. So you have to be able to attain it, and it has to be realistic. And then timely. You have to put a time behind it as to when you're going to do these steps or as to when you're going to actually achieve these accomplishments. Okay. So SMART goals set in there. The business plan is set. An example of any business plan that you can find is going to be a good one, Robert. But again, don't make this difficult, guys. Don't get stuck already. I can see a little bit of the pushback here in the chat. Guys, you can do this. We're talking about a business plan. It's your business plan. Just think it through. What is it you want? We're not submitting it as a contest. This isn't a business plan contest. You're not going to get graded on this in the business plan 101. This isn't a collegiate level course, so there's no pass fail. This is yours. This is yours. Okay. Fantastic. Thanks, Melissa. Glad to have you here. Good deal. Okay, there you go, Robert. You're on the right track. We good? We good? Okay. Let's see here. Next session is tomorrow, but the business plan is not due until next week. I'm not sure what Kurt put in there, so I'll leave that rule up to him. I am just the face and the voice, and just the voice, really. So I will let Kurt speak to that as well. Is this a business plan that we can use to take to the bank? You're going to have something a lot more detailed than this, Kelly, than you would take to the bank, but it's certainly a start. So the business plan looks like a chart. Am I looking at the right thing? Boxes. Yep, it is. It is, Kim. Yep. So this is for you. This is so that you begin thinking about this. As I said, the business plan that we share with our students that begin working with us in our mentoring program and the things that we take to our lenders and our private equity partners, that's a 30-pager. That's very well thought. This is for you. This is what you need to, put your mind to, okay, I'm thinking about getting into the storage business this year. Here's the things that I need to do to take it to the next step. And then beyond that, then you're going to begin creating a very long and lengthy business plan when you have a deal to put in front of the bank, because that's going to include details of the deal and details of the market, your company and your team. I mean, you haven't done any of that yet. So 2 pages is enough. When you get to that place, when you have to define to your bankers and your private equity partners, if you use them, what the plan is, then that's when you fill in the gaps in the details. So there we go. Okay, Kurt said it will be due on Monday, so it is due a week from today. Okay. Flyer says the sessions go from the 18th to the 22nd. So I was just checking. Is there another session next week? We're wrapping up today, but we will be having the awards next week. All right, gang. So with that, we're at 5:33. You have your marching orders, and you've got a good understanding of the reasons why you need to be in the self-storage. And here, let me ask you one other question. I'll ask you now, and I'll ask you at the end of this, at the end of 5 days. If you've been thinking about self-storage, you've been interested in getting into this, if not now, if not this year, if not January of 2021, that you begin to launch this and take the next steps. And by launching, I mean taking the next steps to get into this, then when? When are you going to do it? Because right now, folks, there is a perfect storm. And if you're not going to do it now, let's not kid ourselves. So if not now, then when? And if it's not now, meaning this week, then it better be sometime this year, because if not, you will miss out on one of the greatest land grabs. And when I say land grabs, I mean in self-storage and investment grab of our lifetime. We have been preparing for this since 2011. We began building up our war chest, our list of lenders, our Rolodex, our private equity partners that have a lot of cash to come alongside of us, so that we knew that when the fallout came, meaning the next recession, the next chaos in our economy that was going to release all these projects and properties and development projects because of pent-up demand and developers that are sitting holding the bag because their lender went by the wayside. Guys and gals, I say guys collectively, all of us here, we have the greatest opportunity right now for the greatest land grab and self-storage that I've seen in my lifetime. And we plan to move forward and take full advantage of this. We've had the wind in our sails for many, many years of an incredible economy, and we've done very well during that. But now is the time as we head into this next season in our economy where self-storage is going to shine and the opportunities are plentiful. So if you haven't made up your mind to do it yet, you best think about when. and then set that date in stone. Or if not, then I hope that I'm at least entertaining for the next week. If you're going to plan to just listen and not do anything, I will do my best. But just remember, my jokes are for me, and my jokes are for Bob. All right, gang. This year, thank you. Good. All right, gang. That's what I want to see. All right, that's it, gang. So signing off for now. We will see you all tomorrow. Take care, everyone.